we're not planning to come to U.S.
And I don't even know if the big three, do they have enough time to, with all the money they're blowing on this kind of stuff, they're eventually going to have a day of reckoning.
The big three are not going away.
This one is actually a no trade for me. If we get down there, then I'm still in the seller's camp for Tesla.
There could be a Cathie Wood imitator out there buying Tesla, not letting it come down, not caring if they get it cheaper, tour de force, arrogant buyer.
All that and more. So let's get to it. Tesla stock is up in the pre-market a little over 1%, sitting at 201.99. It would appear my protective puts are evaporating my money as fast as my calls did previously. Who would have thought trying to time the market is a terrible idea? Let's see how the opening bell treats us before we decide to get out of any positions. We still got a few days before this could correct itself. Should Tesla soar past 205 per share? Might have to switch tactics and go back to buying calls.
The world's top EV maker, BYD, unveiling its ultra-luxury sports car overnight. The U9, sold under its Yangwang brand, comes with a hefty price tag of $233,000 in China. It is the latest offering from a car maker that's aimed to compete at every price point, a strategy that helped the company top Tesla last year as the largest EV maker in the world. I sat down with BYD's Executive Vice President and CEO of BYD America, Stella Lee, to talk about the company's evolution and the key markets the firm is aiming to compete in outside of China.
I think every country besides the U.S. we saw the trend is almost duplicate the story of China in the past 10 years. Like, for example, in Brazil, BYD into Brazil 1.5 years ago. But then in the beginning of last year, the EV penetration in Brazil is less than 1%, it's 0.8%. But by the December of last year, the EV penetration is 5.7%.
I mean, let's be honest, going from practically nothing to something is going to invoke a huge percentage increase. But the global trends are clear. The entire world is going to follow the path of China, of Europe. This would happen faster if auto manufacturers were making any money off of their battery electric vehicles. There's no wonder why BYD is having success. It's because every vehicle that they make, they're making some money off of it, while every other auto manufacturer has a minus sign in front of all of their gross margin numbers when it comes to battery electric vehicles. I mean, if it don't make dollars, it can't make sense. And for legacy auto here in the United States, it just doesn't make sense, especially when people are still buying your internal combustion engines, gingerly stepping over to the stepping stone of the hybrid. I hate to tell you this, GM, Ford, Stellantis, after the stepping stone, there's only one more place to go. And if you're still not making any money on your battery electric vehicles, I mean, do I have to spell it out?
Do you think BYD can compete in all those markets you just mentioned?
Yeah, for sure. Because the Chinese market is the most competitive market. If you are the winner in the most competitive market, why not? You cannot win in other market. It's just about the timing issue.
Can you keep the cost as low as you have in China as you expand abroad? Because that's been one of the big propositions, right, from BYD, is that you were able to offer a really, really cheap price point for those consumers who are looking to make the transition. Can you keep those costs low outside of China?
Yeah, but I need to correct your comment here. So BYD is not only offer affordable price, but we offer most advanced, innovative technology there.
So you're competing on innovation, not necessarily price point anymore. That's the evolution of BYD.
Exactly. So we almost everybody in like our consumer recognize BYD is more like a technology company instead of like a cheap car manufacturer. So we are a technology company. Plus the car design you see is very stylish and then very modern.
Technology company. Kind of sounds familiar. Boy, I wish the narrative coming out of our legacy auto manufacturers were, we're a technology company. Oh well, cheap auto manufacturer it is.
How long until you have a factory in Mexico?
We have manufacturing. We already officially start manufacturing, building the facility in Brazil. So we are now have a team to invest in where the location to set up a Mexico manufacturer. So maybe by second half of this year, we can officially announce our plan to invest in Mexico.
So you'll make
But,
the announcement in the second half of this
in
year.
second half. But,
But the
our target is we build a facility in the south or central region. Our target is to build this facility only mainly support Mexican market. It's not to build that Mexico. Is not to build that manufacturer to support U.S. We're not planning to come to U.S.
If you believe that, you must be sucking the glass. GM, Ford, Stellantis, clock's ticking. They get that factory up and running in Mexico. You better be ready to compete. Support the Mexican market. Ooh.
No plans to come to
No,
the U.S.
no.
Why not?
It's too complicated. It's an interesting market, but it's very complicated if you're talking about EV. I think the U.S. market is a little bit slowed down on electrification, and a lot of confusing, also very complicated. So we think, no, let's hold. We don't have plan to come to U.S.
The politics are complicated.
Everything is complicated. Politics complicated, charging infrastructure complicated, and then it's confused for consumer, and then they don't know which to choose. So then I think.
What do you mean when you say it's confusing for the consumer?
Here in U.S. is you have too many confusing noise, speech from different politics. Then this can bring a lot of confusion to consumer, and also to auto manufacturer. They're not eager to invest.
You don't think they're eager to invest?
No, because I read the news, always see, this company hold their investment on EV, that company holds their investment on the a battery manufacturing. A lot of topic, we don't know what's happening. But in China, the message is strong. If you are not investing for electric car, you are out. You will die. You have no future.
Damn! Ding, 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 ding! Tell her what she's won, Johnny. Your mother. Right. I'm still not buying that they don't want to come over here into the U.S. market. But she's absolutely right. The charging infrastructure is complicated. This CCS, NACS thing, all of legacy auto is scaling back. In China, if you're not about EVs, you're going to die. That might be a little truer here in America than she thinks.
Wall Street Journal on the front page has that, I know you probably saw it, that bar chart. Then the story later in the paper, cooling demand puts electric car startups in a bind. I think everybody's in a bind, Phil. It used to be, and it points out, they couldn't build them fast enough. If we could build them fast enough, we could sell them. Right. Now they're building them just fine.
I wouldn't say they're building them just fine, Joe. They're not making any money on the vehicles just yet. As for them not being able to sell them, well, they're trying to make a lateral move from internal combustion engines to hyper inefficient battery electric vehicles. Quite frankly, you couldn't pay me to drive another vehicle that doesn't have a Tesla logo on it.
All those fears that we keep talking about that all of us have, all the anxieties that come with an EV, is there enough money around for these startups to last until we get those problems solved in terms of infrastructure and battery life and all that stuff? I mean, you only have so much money before, and I don't even know if the big three, do they have enough time to, with all the money they're blowing on this kind of stuff, they're eventually going to have a day of reckoning.
The big three are not going away. The big three are not going away.
But it's a lot of money
they're making off of
black hole.
Ooh, methinks thou dost protest too much. According to Phil, the big three are too big to fail. And failing they are. You won't be able to keep the Chinese from our shores for very much longer. They may say they have no plans for entering the U.S. market, but their actions, they tell another tale.
Why are you spending as much as you are spending on EVs when some of that should A, either be pared back, which they have now done, or B, bring that back to shareholders, which they have also done. And since they've made those decisions, you've seen the shares do a little bit better. Look, they're not off to the races, though.
I don't give a about those shares. Those companies need to be doing whatever they need to do to survive the decade, and that's making battery electric vehicles efficiently, profitably. As we edge closer to 2030, I don't want to even hear any talks about a bailout. You know what's coming. You know what the consumer is going to demand. They don't want EVs. They want Teslas. And it's not like Tesla's making you navigate a minefield as you make this transition, open sourcing their patents, allowing you to copy what they do. IRA incentives, tariffs on the Chinese. You've been afforded every single opportunity to succeed as you make this transition.
And as for the startups, we'll find out, Joe, if they do have the money to make it to, let's say, 3 years from now. We talked with RJ Scaringe from Rivian. You heard that conversation, and he essentially said, look, we think that we have the means to get to the R2 production in 2026. They also have Amazon as a primary investor. So it's not like these guys have nobody who can back them up if they need to go to the capital markets again. But what happens with other companies like Fisker? We'll get their earnings report, or financials, I should say, for the fourth quarter later this week.
You see what he did there? Earn what? We can look at your financials, but you have no earnings.
Yeah.
Lucid has the Saudi Arabian investment fund that is backing them. So we'll find out.
Yeah, exactly. You couldn't even say it with a straight face. You had to qualify it when you said we'll get their earnings.
All right. Next up, we have Tesla. Tell us a little bit about this one. I mean, there were people who were screaming for Tesla 300 when it was at $299. It had gotten close. It has since pulled back greatly. Your thoughts? Is it's at $199 today?
Yeah. So this was a breakout. I'm not a buyer of Tesla, so I was looking for an excuse to get short. But it's not just to close your eyes and get short here. The trend is to the downside. If I get a trigger to the downside, which we're not getting today, then I'll consider a short. This is one of those ones that I have to be convinced that the trend to the downside is going to continue, and therefore I need that breakout to the downside. So this one is actually a no trade for me. If we get down there, then I'm still in the seller's camp for Tesla.
I'd love to hear your thoughts on the chart, Kevin.
And let me see if I can convince Mike here. When you're looking at a one-year daily chart, you never want to try to call a bottom, to say the least here, but you are actually seeing some green shoots potentially pop up. And when you're looking at point A, you're actually seeing the symmetrical triangle actually taking place here based on a one-year basis. It's making lower highs, but also making higher lows if you're looking at it on this particular time frame. And once we see that meet the apex, we could actually see a significant break either to the upside or downside. Now, point B is actually going to be the greatest thing about all of these charts we're going to talk about today. Now, if you're a part of Elliott wave theory, if you believe in that, we can actually see 3 waves that are taking place here.
Now, I'm going to be honest with you. I don't understand a thing about what's displayed on that chart. That looks ridiculous. I mean, it's all speculation. If, could, maybe, should. If it happens, I told you. If it doesn't happen, oh, it's an anomaly. According to my speculative theory, all it really is a history of past buying and selling activity. As humans, we have tendencies to do things in a certain way. But now we have robo-traders buying and selling at the speed of light with various different mechanisms in place, interlocks that trigger buying and selling activity. The stock market is a volatile place. Add on fact that TSLA is one of the most volatile stocks you could ever possibly trade. If you're not careful, you could lose your shirt.
Tesla's $635 billion, and it does feel like some big portfolio manager right now, right here, has decided to make a stand, not letting it go any lower. I know that sounds strange, but that almost conspiratorial, right? But that is how Tesla trades. There could be a Cathie Wood imitator out there buying Tesla, not letting it come down, not caring if they get it cheaper, tour de force, arrogant buyer.
If I listen to Jim, maybe I should sell all of my Tesla stock, get out of all of my option positions, and then wait until it hits the bottom. Jim, can you tell me where the bottom is? Some Cathie Wood imitator. Get the out of here. In my bear case, I have Tesla sitting at $315 per share. Any price below that is definitely a buying opportunity for me. There's no conspiracy. If you've done the math, if you've done the work, and I'm gonna tell you right now, buying Tesla at 200 in 2024 gonna look like the bargain of the century in a decade's time. In conclusion, BYD has no intention of entering the US market. We're just gonna take them on their word, right? Right. Don't worry, GM, Ford, Stellantis, you've got plenty of time. plenty of time. TSLA's chart is still quite bearish, but something tells me they're getting pretty close. They're poised for a breakout. On their way back to $1 trillion? We need more Cathie Wood imitators, someone that's done the homework, has conviction about the company, and willing to put their money where their mouth is. Now, I may not have fund manager money, but that is exactly what I intend to do. That's all I've got for you today. Be easy. Bird.